Hey guys, we're going to have a look at the 1987 stock market crash chart. I'm going to see if there's any similarities to what's happening right now. So let's get straight into it. Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. Hey traders, I've just recorded the video walking you through the top success mindset trading techniques to really help you move forward. You know that most of your trading success comes from your mindset. So click on the button above that says success mindset to get access to this video right now. Alright, hey traders, so the last few weeks I've been promising you guys I was going to do like a sort of a comparison to 1929 and the 1987 those different stock market crashes and compare them to what's happening right now today. A lot of people say this is different, blah, 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 bing, bing, bong, bong. I don't want to hear your shit, all right? I don't want to hear your shit. At all, what I'm saying here, guys, is that what were the charts saying? It doesn't matter what the theory is. What are the charts saying? That's all that matters. The charts are king. And for people who don't realize that, then I don't know what you're smoking, because if you look at a chart, you look at the high, you look at the lows, you see what's happening right now in the Dow Jones, right? We just keep making highs, highs, highs. So, looking at this is the 1987 stock market crash. Now, what actually happened here, right? We had a nice run up here, as you can see. Let me see if I can make that. Can I make that smaller? All right, so we had a nice run up, and then we went sideways, as you can see. We went sideways for a good sort of half year, right? And then we went for another good run. And then we went sideways, and then we went for another good run. And now, as you can see, right, what happened here, we actually ran down, sort of went sideways for a bit. We had a nice run up, and then we broke down. But where did we break down? We broke down past these lows through here, and then the stock market, and then the stock market crash happened. So, what was yesterday I talked about the 1929. Now, what did the 1929 look like? This. It ran up, came down, ran up, made a low, came down, made a low peak, and then broke down. Right? Nice head and shoulder formation. But this one here is like run up, come down, come up, and then broke down. As you can see, right? You can see how this trough here is still higher, but once it makes that lower peak, and once we start breaking past that low through there, that's when that's when the alarm bells need to be on. That's when now guys, what I'm saying is this: if there is going to be a crash this year, this is going to be, the charts are going to say something like this. Every single time in history when we've had a crash, in the stock market, that is, you've seen this sort of formation, these really, really simple patterns. And you can see what's happening through there. So let me actually bring you up another chart. And this chart that I'm just showing you right now, this is obviously the 1987 stock market crash, but it's a different view, all right? And a different view. And I want to share this with you. All right, I want to share this with you to show you that there's different formations that can form on the chart if the market is going to have a significant sell-off. A significant sell-off. Now, generally speaking, the market won't just pause and then just go crash straight down, right? There'll be something to that. There'll be something to the crash, right? There'll be something that the charts will start to show you that what's happening here. So we can see here, right? We can see that we actually had this trough through here, right? And we had sideways through there, and we came down. And as it started breaking this low through here, that's when there was nothing on that chart to say this is bullish. Everything is screaming bearish, and then we had the big 1987 stock market crash. As you can see there, right? We had the big move down. So guys, everything on the chart, this is the sign, this is the warning that we need, that if the market is going to crash, this is what the chart will tell you. It doesn't matter what anyone else says. People can predict that the markets are going to happen on this date and stuff like that. That's total bullshit. Absolutely bullshit. This is what's happening on the charts. Now, let me actually bring up, so that's actually there. Let me actually bring up something here, guys. And what I want to do is I want to bring up, say, the Dow Jones. And I want to share something with you. Let's go back. Let's look at a blank chart. All right. Let's bring up a daily chart here. And let's squeeze this up. And I want to go back to late last year. All right, late last year. So we'll go back to 2015. And what I want to talk about here, guys, is, again, yesterday I talked about just by simply looking at the peaks and troughs, the highs and lows, and analyzing that every single day and see what's happening, gives you the story of what's going on. Let's go back to remember the flash crash of 2015? Could that have been seen? Well, let's go have a look at this here. What was actually going on through here? You can see here, what's this? This is the Dow Jones. A peak, a trough. It's a lower trough. You have a lower peak, and then a lower trough, and then we had a lower peak, and then we had another lower trough, and then we had a lower peak, and then guess what? Bam! Market came down. Oh my goodness, the flash crash! No one saw it coming. It's like no one did see the flash crash coming, but is there anything on this chart here to say that this is bullish? No, the sellers are in control. Lower peaks, lower troughs, sellers in control. Guys, it doesn't have to be that complicated. It doesn't have to be. And as you saw on the 1929, if you haven't seen that, go back to my video. The 1929, you saw that the peaks and troughs are showing you what's happening. I just showed you today on the 1987. I'm showing you right now what happened in late 2015. Then look, then the downturn that happened. Then the downturn that happened at the worst start to 2016. Right? We probably all heard that. What is this? This is a peak. Right? Comes down. This is a lower trough. This is a lower peak. This is a slight bit of a double bottom. Bit of a slight lower peak as well too. What's this? This is breaking the lows, and then bam, down we go. Is it as this market's breaking these lows here? Is there any reason? If you were trading the diamonds of the DAI, I think it is DIA. Basically, if you're trading that or the S&P and this happened, is there any reason to be long? No. Why? Because we've just went through a sideways consolidation and now we're making lower peaks, lower troughs. We're breaking past previous lows. This is a down trend. This is how you represent a downtrend. People say, I've had so many people, or some people say on my channel, John, charts don't mean anything anymore. This is bullshit. Look at this here. I'm telling you what's happening. What happened in 1929? What happened in 1987? What happened in the last couple of times when the market came down? The charts were in a downtrend. The charts were weak. So there was no reason to be long. Oh my goodness, the market got me. The market went down. No, the market didn't get you. You got you. Because you weren't analyzing, you weren't studying the charts properly. But ever since then, we through here, remember this is the Brexit here, right? But did we get lower peaks, lower troughs? No. What did we get? We actually got indecision this time. What do we got? We got this higher peak, got this sort of trough here, or higher peak, higher trough. We had this lower peak, we had this sort of lower trough, we had this lower peak, we had this sort of equal trough. Now we had this higher trough, and then suddenly the buyers took control. So as you can see, there wasn't really any real dominant move. We weren't getting low peak, low peak, low peak. And the market ran up, went sideways, buyers still in control, sideways, 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 not really much happening through there, and then bam, the buyers in control. As you can see, if you look at this here, the market stair-stepped up, now breaking up. We now have this as the trend line. The market's breaking out of this trend line. It's breaking above these support. All this resistance levels here now became support, breaking up. Who's in control? The buyers, and away we have gone ever since. It is that simple, guys. It is that simple when it comes to analyzing charts. But we need to be analyzing it properly every single day to be noticing what's happening right now to benefit from this. So is there anything on this chart to say we're going to get a crash right now? Nothing, right? Nothing. And there's only two things that's going to cause a crash. One, we get a bullet move to the high side, and the market just does this, whoosh, go like that, and just really goes higher. If that does happen, then we do have a really good chance of something like that happening. Because what goes up really quickly comes down really quickly. You saw that on the Bitcoin chart. Right, so that's the first scenario, which is not likely to happen, but it's like maybe 10% of the time when a big crash or when a good pullback happens. The second scenario is what I've been talking about here right now. You've been seeing what's happening with the charts. Make sense, guys? So I hope this helped you out. This is a comparison, guys, by looking at the charts, and I hope you can see you've got to get out of the gutter. You've got to get your mind out of that. It's got to be more complicated than that. It's got to be more. You got to look at the fundamentals. You've got to look at this. You've got to look at that. You've got to look at the timing. You've got to look at the dates, and it's all this sort of crap. It's like people that keep calling a stock market crash are gonna keep being wrong until the charts say so. What's this again, guys? Let's just keep it simple. What's this? A higher peak. What's this? A higher trough. What's this? Another little higher trough, and then bam, we go. Who's in control through here? Buyers. Why would the market go down? Now, guys, it doesn't mean that this happens all the time, right? There are times when the market goes up and then suddenly starts to reverse. But that's what we need to do as traders every single day. We need to be analyzing that. Because right here, I was saying, if we do create a low peak and break past these lows through here, we can see a down. We can see a down move. And I was ready to hit that put options. I didn't. I actually had call options, and I wrote this thing up as well too. As in, like, I had call options on some other stock. I reviewed that the other day. So, guys, and it's easy, but it's not. It's simple, but it's not easy. It's simple because you can see what I'm talking about here, but it's not easy because every single day you must have a clear mind and see exactly what the charts are telling you, and that's what it comes down to, guys. It comes down to the charts. People say charts don't matter, that the market's manipulated, and this and that, and all this sort of stuff. It's like, no, the charts are always forming peaks and troughs. Go back in history, even to this day, and tell me what the peaks and troughs are doing, and that's going to tell you who's in control, and that's all that matters. I went back to 1929, I went to 1987, I even looked at Bitcoin charts in the other videos as well too. This is the thing we need to focus on, guys. So guys, moving forward, if there is going to be a crash, you now know what to look for on the chart. Hey, thanks for watching. If you'd like to get more free education about trading, then click on the box that says free trading course. This is a free trading course. It goes for around 12 hours long. It's about 12 videos long. Covers everything from chart reading, mindset, trading systems, money management, trade management, everything you need to get yourself ahead in the markets. And if you'd like to get my help personally, then click on the box that says get John's help, and you'll be able to see how you can get my help personally. Don't forget to like, comment, and subscribe on the video. And remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.